Hello and welcome to today's Smartkarma webinar in collaboration with ASEAN Exchanges. I'm your host, Maliha Hadi. Today, I'm excited to welcome Smartkarma analyst Angus Mackintosh for an exciting chat on dual listings in ASEAN. Angus is the founder of Cross ASEAN Research, a research house providing comprehensive insights on companies across Southeast Asia. He possesses over 25 years of experience in equity sales and research and has extensively covered a wide range of markets in Asia. Today, he will be discussing the growing trend of dual listings in ASEAN, the rise of depository receipts, and which regional markets are leading the cross-border integration. Angus, thank you for being with us today. So before we begin, a bit of standard housekeeping. We are taking live Q&A for this webinar, so I would request our attendees to post their questions in the Q&A tab at the bottom of their screens. Please also refrain from resharing the contents of this webinar without express permission, because a recording will be available to all attendees on the registration page afterwards. Without further ado, let's dive in. Angus, can you please share a bit about yourself with the audience?
Yeah. Thank you very much, Maliha, and thank you for everyone who's attending the webinar. My name's Angus Mackintosh. I'm an independent analyst. I've been following Asia and actually Southeast Asia since 1990. So even more than 25 years, no, more like 35. But yes, I was in equity research and sales with various investment banks for 25 years, and I've been an independent analyst for about 10. And most of that time was spent with publishing research on Smartkarma, which has been a fantastic platform to be using. I'm also publishing research with Alethea Capital. I mean, that's probably my background. I'm sector agnostic. I only look at Southeast Asia. I just focus on that, and I look at more sort of equity bottom-up research rather than macro. But everything I do has a kind of thematic overlay to it and a macro overlay to it. But Malia, I think we'll probably start off with the subject in hand. So I'm just going to share my screen.
Yes, thank you.
Right. Well, let's start off. What are first of all, what are dual listings? Dual listings are effectively companies listing away from their home market in an overseas market. These most of the time take the form of depository receipts, which are sponsored generally by a broker. So the broker will procure shares in the local market and hold those, and then issue a depository receipt in an overseas market, which will effectively mirror the price of the local stock. And that takes into account, foreign exchange and all that kind of thing. So these are nothing new. So depository receipts and most commonly American depository receipts or ADRs have been around, for a number of years. There are two types of depository receipts. There's sponsored depository receipts, which are sponsored by a broker and worked with the broker works with the company to make that to issue those receipts. Or there's the unsponsored type, which is doesn't involve the company at all and is less common and has higher risk to it. So what we'll really focus on today is more on sponsored depository receipts. So the companies themselves are behind the listing with the help of a broker. Take a step back. So American depository receipts have been around for quite some time, 20 or 30 years. There are a lot of them listed in the US. You've got some numbers here on the presentation. You can see Thailand, Malaysia, Indonesia, Philippines, Singapore, all those markets do have overseas listings. So they have a dual listing of a number of companies on an overseas exchange. And the idea behind having a foreign listing is to access foreign capital and institutional capital, but also to allow foreign retail investors to invest in those shares in the local currency, for the most part, US dollars, without having to set up an account in the individual markets. Now, has this been a success? Well, in some ways, yes, it has, but in others, not. So the volumes traded in ADRs for Southeast Asian companies tend to be quite low. They do often provide a sort of price indication as to what might happen in the local market if they're trading overnight when the Asian markets are closed. they will provide potentially a price indication as to how, those markets might open the next day before the local stock starts to trade. A good example of that would be PLDT in the Philippines, which is often used as a barometer for how the market would perform the next day in the Philippines, is one example. But the majority of these stocks, the vast majority of the stocks are generally large market cap stocks, very well-known names. To give you a few examples, in the Philippines, it would be PLDT, Ayala Corp, Aboitiz Equity and Ventures. In Indonesia, it would be stocks like Telkom, BRI, BMRI. That's BRI being Bank Rakyat Indonesia, Bank Mandiri as examples. In Thailand, Bangkok Bank, Siam Cement, Bangkok District Medical. And in Malaysia, companies like Maybank, for example, or Genting will have ADRs listed in New York, enabling investors to potentially invest in those companies, offshore, rather than having to set up an account, in each individual local market. So they do fulfill a role. What's been happening more recently is that generally institutional investors will, rather than investing in the ADR, they will tend to set up an institutional investor. If they're looking to invest in Asia and specifically in Southeast Asia, what they tend to do is to invest, set up accounts in each local market and invest directly. That gives them a sort of a pure exposure, and that's sort of part of their remit. They will occasionally, obviously, also to buy into ADRs. It's not necessarily against the remit that a lot of fund managers have, but they will tend to invest in local markets. Some Southeast Asian companies, domiciled companies, have decided to go directly to overseas markets. So they're listing directly in New York, for example. Grab and Sea Limited are examples of companies who are domiciled in Singapore who've decided to list in overseas markets because they see the investor base in those overseas markets, specifically in the US, as being one which has more of a focus on the particular sectors in the tech space. Grab obviously being ride hailing, and Sea Limited being mainly in e-commerce and gaming. So that's a diversion. So what might happen in the future? Those companies could have a dual listing in Singapore, for example, which might be a good thing. One of the other reasons why companies haven't continued to have overseas listing is that maintaining the listing means there are costs associated with that, with NYSE listings. There are also extensive regulatory and reporting requirements. So it's not without a cost for an Asian company to list in the US as an ADR. So that's definitely worth keeping in mind. The SGX and New York Stock Exchange have actually have signed a collaboration agreement going back to July 2022 to facilitate dual listings on both exchanges. Now, that hasn't yet really come to very much as yet. So the agreement's there, but we've had a bit of interest. I think one company, AvePoint, looked at potentially having a listing in Singapore, but that avenue is open in the future. So there is a collaboration agreement in place between Singapore and New York. So where are we now? So what we're really talking about here is Southeast Asia and the prospects for dual listings within Southeast Asia. So this process, if you like, has already started in that an MOU was signed in November 2024 to collaborate. The exchanges signed, 6 exchanges signed a collaboration agreement on the issuance of depository receipts and to develop market and regulatory frameworks for the issue of and trading of DRs, depository receipts, on the different exchanges. So that, the idea behind that is sharing information, engaging with market regulators and participants, giving companies in Singapore, say, access to capital in Thailand, or between markets, basically. So you could have a liquidity pools in Thailand, which might be interested in investing in the Singapore stock or an Indonesian stock. So it provides, opportunities for domestic retail investors. It sort of raises the profile as ASEAN as an attractive investment destination because there's more liquidity around those traded companies. But so what you need to have for that to happen, and we've had instances in the past when regulatory foundations have not been as sound as they might have been. A good example of that is the whole sort of CLOB issue in Singapore, between Singapore and Malaysia during the Asian crisis. I'm not going to go into any detail on that, but it does underline the fact that you need very strong regulatory foundations in order to protect against, well, not just against fraud and share price manipulation, but also the safety of the capital, between the different markets. So there's an oversight on trading and regulation between the different exchanges. I think that is a very important point to note. Now, Singapore and Thailand have already got the ball rolling. There is already a Thailand-Singapore DR linkage, which was launched originally in November 2023. There are now a total of 19 DRs between the two different markets. There are already in Singapore, there are already a number of 10 Thai listed stocks in Singapore. Philips Securities has issued a number of DRs on a number of Thai companies. The list there is of the stocks, but they tend to be the bigger, larger market cap stocks, well-known names, where local retail investors may well know the brand, know the name, and would be an attractive potential investment, and it will save them going off and setting up an account in an overseas market. Takes away the currency risk, takes away the execution issues. So they're executing with the local broker in their own market, which makes life a lot easier for retail investors. So you can see there's a list of blue chip companies from Thailand listed in Singapore. Thailand has about 9 Singapore companies, which again are mainly large cap names, DBS, Singapore Airlines, Singtel, ST Engineering. These are all companies which are probably quite well known, where Thai investors may look to get some exposure again without having to go and set up an account in Singapore. So Singapore and Thailand have sort of started sort of running with the ball, if you like, on the issue of DRs, SDRs in Singapore, and TDRs in Thailand. So what's next? So what I would foresee potentially in the future is you might see some dual listings of some overseas listed tech stocks in Singapore. That would be a positive, I think, for Singapore Exchange. And it would enable investors, local investors who probably have a lot of interest in those companies, will know the brands, to invest in the local market rather than having to invest in an overseas exchange. Again, taking away the currency risk, and also allowing for real-time trading in those companies rather than delayed in trading in the US. And Singapore is obviously also looking, for foreign companies to list as SDRs in Singapore. There are a number of Hong Kong listed companies with SDRs in Singapore already. Big names like Tencent, BYD, Alibaba. The same is true in Thailand. The exchange has also highlighted core sectors where they're looking for dual listings. Financial, consumer, healthcare, technology, very important, commodities and resources. And there's a distinct possibility you might see, some, say Indonesian companies who have businesses in those sectors may look to do a dual listing somewhere like Singapore. Thailand has been sort of quite aggressive in terms of rolling out its own DR scheme. So it's got quite a few of these big Chinese companies, as I mentioned, who have listed. So Tencent, Alibaba, and Baidu being 3. They also are incentivizing DRs, so allowing for tax exemptions for issuers. And holders of DRs also have a withholding tax, or a maximum withholding tax, I think of 10% on those investments, to encourage transactions and promote more investment in these foreign securities. The Philippines was actually an early mover in this space, and going back, quite some time. So, Del Monte Pacific Limited, you'll know the name, was dual listed in Manila in 2013 from Singapore. Emperador, which is a brandy brand, they launched a dual listing in Singapore in July 2022. There have been plans for other companies to list. So the Philippines has had a small number of dual listings already. So obviously some of which going back quite a long way. Indonesia has so far looked to the north. So the IDX and the Hong Kong Stock Exchange has signed an MOU to explore strategic collaborations. The idea is obviously to allow access to a deeper pool of capital for Indonesian companies listing in Hong Kong. Now, that would make sense for some Indonesian companies with exposure to China. I've highlighted here coal, palm oil, nickel, and the whole EV battery ecosystem. So that is relevant, but we haven't seen any examples of that happening as yet. Malaysia's already gone kind of multi-market. So I've put a table in here which gives you a few examples of overseas listings of Malaysian companies. Obviously Hong Kong Exchange, Singapore Exchange, and YTL interesting in Tokyo as well. I think just strong relationships, the group and Japan. And there's even an ASX listing as well there as a dual listing for Om Holdings. And two SGX listed companies also expressed an interest in listing in Malaysia as well, which I've put there on the presentation. Vietnam is a different case. I mean, not for want of moving forward with dual listings. The companies themselves, I think, are quite behind looking at having dual listings, but local regulation makes it very difficult for them to do that. VinFast is the only successful overseas listing, and that's a pure overseas listing. Tiki is looking at a US listing, VinFast Group is also looking at an overseas listing through a Cayman Islands company. So what's happened is the companies in Vietnam will have will tend to look at moving the company to an overseas domicile before they actually list in an overseas market. But that has yet really to happen. But there's something which a number of companies are exploring. So just to round up, so Singapore and Thailand are certainly the markets which are leading the way, with Malaysia obviously pushing forward on a number of different fronts. I think the trading liquidity for some of the Singapore stocks in Thailand has been quite reasonable. One interesting one is Thai Bev, which you cannot buy in the local market, which is listed in Singapore, and now the local investors can invest in Thai Bev, through a TDR in Thailand. As I say, Indonesia, has taken a different direction for the moment. That may change. There are a number of Indonesian companies who have a Singapore domicile who are listed in Singapore already, and companies in the palm oil space, for example. For Vietnam, I think that's more a case of strict domestic domicile regulations, which have prevented companies in Vietnam from doing dual listings. The DRs and ASEAN markets have tended to be the preserve of retail investors rather than institutional investors who will tend to go directly to local markets. So it's kind of retail driven, and it provides two different ideas. The idea is basically to provide access to retail investors and improve liquidity on your local exchange through allowing them to invest through your local exchange in foreign companies, and allowing your local companies to get access to other liquidity pools in other markets by allowing for dual listings. And longer term, it would be good to see some of these larger listed tech stocks coming back to a listing in Singapore on a dual listing basis. But that's kind of the end of my presentation. Why don't I stop sharing the screen and Malia, over to you.
Thank you, Angus. That was very interesting. And as you mentioned at the top, you can now send in your questions for Angus using the Q&A button on your Zoom app. Angus, I actually do have a few questions for you from the team. So the first one being, you mentioned that this is the preserve of retail investors, mostly when we talk about, dual listings within ASEAN. So a natural follow-on question, just to understand, what needs to happen, in your opinion, to attract more significant institutional capital when it comes to these dual listing schemes in ASEAN?
Well, I think it's more about having some of the large. I mean, I mentioned the two big tech listings in New York, for example, which are both domiciled in Singapore, being Grab and C Limited. Grab being a household name, retail investors will be obviously instantly attracted to that. But for Asian institutional investors, being able to access the stock in the local market would be quite a big positive for them. So they don't need to buy in New York. They can actually invest in the local market. I mean, they're not forbidden to invest in overseas listed companies which have their business in Asia. But I think having a local listing for these bigger cap stocks would be quite a positive thing. I mean, the other thing to highlight would be that a number of these ASEAN markets have quite big local mutual fund industries. Now, those local mutual fund industries tend not to invest, offshore. They tend to focus more on investing in domestically listed stocks. So it may make it easier for those funds who are looking to potentially get some overseas exposure to invest in sort of bigger cap companies in their local market of an overseas dual listed stock. So say, for example, CPO of Thailand had a dual listing in somewhere like Indonesia, which has a very big local fund management community. And some of those local fund managers do have a regional remit. It would make it easier for them to invest in some overseas companies if they had a local listing. And that point is worth making.
Got it. So in that regard, Angus, just a follow-on question, right? When we talk about dual listings, maybe 5 years from now, do you see more maybe fresher, smaller IPO candidates who might look for regional exposure when it comes to listing in ASEAN markets, or do you see more larger companies that are trying to capture that local liquidity? As you mentioned, that would be an important catalyst as well to getting institutional capital on board.
Yeah, I mean, I could certainly see that there can be, an expansion of the number of companies listed in overseas markets. I mean, we've yet to see any real result of the ASEAN 6 as a whole exploring. Because so most of the dual listings have been between Singapore and Thailand for the moment. But that can, obviously SGX is very keen to increase liquidity pools and all that kind of stuff, and increase investor interest. So I think and the Stock Exchange of Thailand likewise. But I think that scheme looks to have been quite successful because you do have big sort of retail pools of capital in both markets. So the prospect of having more dual listings between markets, I think, is a distinct possibility. I mean, it would be good to see, say in the IDX and Singapore or IDX and Thailand, exploring more dual listings, because I think there are sufficient pools of capital, local retail pools of capital in all those markets, which would be open to investing in some of these sort of overseas stocks, because they will know some of the brands, and say, for example, Indo Food, everyone knows their instant noodles, Indomie, across the whole region. So for someone in Thailand, they would say, oh, I want to buy into the company that makes Indomie, and I can do that on the local exchange, or the same would be true someone like Singapore. So there's that aspect to see. There are brands which sort of transverse borders, and a number of companies which have businesses across across the region in different markets. And they may, I mean, in some cases, companies have chosen to go for a local listing in each market. Mr. DIY is an example of that. They have a listing
Yeah.
in Indonesia as well. So that's another way of doing things. They can either go for a direct listing in the local market, or they could have a dual listing, which would enable local investors to get exposure to those brands.
Got it, got it. And just to zoom out a little bit and talk about how we look at the current macroeconomic climate, right? So how do you see like these geopolitical uncertainties, for example, potential tariffs or just macroeconomic shocks impacting this MOU and the schemes that follow from that?
Well, I mean, I think the whole process of dual listings and development of capital markets can happen, despite the macro environment. I mean, the macro environment is obviously full of uncertainty, and we're still at the stage of tariffs being negotiated and set, and Indonesia just set tariffs at 19% with the US and allowed for tariff-free imports of US goods. So there are negotiations going on. Vietnam apparently has fixed themselves. Thailand is still in a state of limbo with a tariff rate of 36%. But I think that backdrop, you have to look through that, because in the end it's all about developing the markets and enriching the potential liquidity in each individual market. And if that can be helped, and providing more opportunities for retail investors, so encouraging more market participation, through
Yeah.
giving them the option to invest in not just local stocks, but also in foreign companies in their local market. Does that make sense? Because I think
Yeah.
the macro is slowing in Southeast Asia, but it's still a very attractive set of economies to invest in. So there's no doubt about that. But liquidity flows have been one of the main reasons why markets have not performed as well as they might have done. I don't think this is necessarily down to underlying fundamentals, because growth rates in the ASEAN markets are pretty high relative to most global economies.
Got it. Got it. I think that's very clear. So I think from our end, that's it for today, Angus. Thank you so much for your time, and thank you everyone for attending. In case you have any other questions for Angus, please feel free to leave them on the Smartkarma Insight page detailing the webinar, and he will surely help address them. And if you wish to keep track of Angus's work as well, we also recommend following his profile on Smartkarma so you don't miss out on any of his insights. Angus is also available for bespoke research requests or premium services. So if you wish to engage him for that, please contact your Smartkarma account manager. Lastly, we would also be sharing the recording for this webinar on the Smartkarma registration page, so you can keep a lookout there as well. With that, I would like to wrap up today's webinar. Thank you, Angus, and thank you all for attending. Have a great week ahead.
Thank you, Leah.
Thank you.
Thank you.